Right, this is the first episode in the UK edition of Trading Transformation. So, right now, all we're looking at is a chart. We've got candles, got wicks, got. Oh, don't want to do that. Got all of this, right? You might be thinking, what the fuck does this mean? I'm going to show you. So, if the other charts ever fucked up like this, double click the right, double click the bottom, and it'll lay the charts back out for you properly. So, wicks and candles. The wicks are these stupid little lines coming down from the body of the candle, and the body is the thick one. So if we zoom this out now, the little line above this little green box is a wick, and the green box is the body. So this is on an hour time frame. These are very important. These are what you need to understand in this video. So we're currently looking at an hour. So every one of these candles is 1 hour's worth of price action. So this was 8 o'clock, the next one was 9, the next one was 10, the next one was 11, so on and so forth. Now, you might be thinking, how do these wicks form and how do these bodies close? So, as you can see here, we've got 18 minutes left to the next hour. See what I mean? American time is currently 20 to 2. So, well, 18 minutes, but you know what I mean. So in 18 minutes, this candle will close and move on to the next candle and create a body. So for instance, this one. Price opened here, it pushed up a tiny little bit, which created that tiny little wick up here, rallied all the way down. Let's say this little wick at the bottom here was 20 to the next hour, so 20 to 10. So at 10 o'clock, it closed there, leaving this little wick to show where price went within the hour, and then moved over to the next one. That is as simple as what time frames are. And now if I do this, if I pin out the high there and the low down here, and I go down to the 15-minute time frame, each one of these candles is now worth 15 minutes. And you can see where that high I just drew out was there, and that low that I just drew out there. And you can even go all the way down to 1-minute time frames and see where the high was created every minute, which is back here, which is there, and then you can see where the low has been created, which is there. Now that looks like a load of candles between that high and that low, which is there and there. But if you simply go up to the 15-minute time frame, stretch candle out, stretch charts out a bit more, now it doesn't look too far away. Now if you go to the 4 hour, the 1 hour, that's where we were, just that high and that low. So that is candlesticks and candle time frames. The wicks are where price went within that time, and the body is where it closed. And again, same with the candles. All you're looking at is up and down. Green means price is pushed up, red means price is pushed down within that hour. So here we had a really big sell-off within that hour. Price came all the way down here. But if you look, because this candle, this one and this one all create a 4-hour candle. So if you look, price closed here at the 4 hour, but on the hour it came down, came all the way up, and then came back down, and that is where the close candle was on the 4 hour. But if you break the time frames down, you can see more information.